Bankless Nation, it is the first week of May, and it is time for the Bankless Weekly Rollup. David, where should we start this week, huh?
EigenLayer releases their token and everyone's mad. What happened? How did that happen? I thought everyone was stoked about the EigenLayer airdrop. After that, CZ gets sentenced to jail, and you won't believe for how many months he is going to jail for.
Wow.
Yeah, there's a specific number that is very related to CZ. After this, Stripe broke up with crypto in 2022, but now it wants to get back together.
We also got some updates on the war on crypto. David, it feels like a full frontal assault these days. We got to go through what's happening in that war, all the battles that we're facing right now, and some market commentary, because markets are down these days.
Month. April was a bad month.
Yeah, so we got to figure out, is this the end of the bull run, or is there some reason for this? Yeah. So let's consult the oracles and figure that out.
Up.
Also, a Solana season. Is it over? Is it coming back? Hey, before we get in though, I noticed Bankless listeners that are looking at this on video may have noticed your left eye. No, it's your right eye. It looks a little bruised.
A little dinged up. Yeah.
Yeah. So you sent me a picture. I think this was on last Friday.
It was Thursday evening. It was
Thursday evening.
Yeah.
I knew it was after we recorded the roll up. And
it was right after the roll up.
This should be like a viewer discretion is advised type segment. So I mean, like maybe we should censor some of this out, because dude, that is gruesome. What happened to you?
Yeah. So like right after the weekly roll up last week, I went straight to Muay Thai sparring. And on Thursdays is like the intense sparring. Tuesdays is technical easy sparring. Thursdays is intense sparring. And I went up against this guy who's like 230 Samoan guy who's like a whole head taller than me. And like usually when you suss out your sparring partner, you kind of like get a vibe for how good they are and how intense you want to go. This guy did not do that. He just kicked me straight in the face.
This was a kick to the face. How many seconds into your spar did this kick to the face happen?
So you do like 3 rounds of sparring, and he kicked me kicked me a bunch of times, and a bunch of times I had to like stop and be just like collect myself, and he like gave me some room. But then like when we went back at it, he was like just started kicking me again. Okay. And then like the third time he kicked me, I was like, oh my god, like I can either ask this guy to like calm down, or I can just like take this and like learn to get beat up. I chose the latter, and then he kicked me in the face, and I like had a 2-inch gash, 1-inch gash, like right above my eye.
All right, so what's protocol for? So I have not actually gotten in a fight in my adult years. Like it's been a long time since I've actually since I've been in a fight. Either in the ring or anywhere else. So what's the protocol for this? Does somebody just I'm sorry? Like, do they apologize once they kick you in the face and cause you to bleed?
Well, so like we started like sparring again, and then he was like, "Oh, your eyeball," and I'm like, "What do you mean my eyeball?" So I went to the bathroom to like go, cause like I get nosebleeds a lot of time, but that's totally normal. But then I go back and I see just like an open like flap of skin above my eye, and I'm like, I think that's bad. And so then I went to talk to the people at like the front of the whole like office, the front of the gym, and they were like, "You should just glue it," and I'm like, I'm gonna get a second opinion on that. I'm gonna go to the hospital and get some stitches.
Wow, so nonchalant. Just glue it, huh? Yeah, okay, so the reason we're doing this at the top of the segment, I imagine, is to put fear in the heart of Nick Carter.
Nick Carter, that's right.
Because we are less than 30 days out to the fight. All right. And
is Nick Carter getting 4 stitches from Big Samoan guy? I don't think so.
What's the poly market? What's the poly market say?
Poly market's actually pretty even.
Really? Okay. Because I'm surprised. I would have expected the picture that you posted of yourself like bleeding from your eyeball, getting like stitches. I would have expected a rational market would have swung in your direction, because that's hardcore.
The current poly market odds are 45% Nick, 47% me, and then 9% draw. So that's actually pretty even. I actually know that there are 2 funds out there, either VC funds, liquid funds, whatever, 2 actual real funds in crypto with liquid capital deployed into the poly market between me and Nick Carter.
Wait, VCs are bidding on this?
Yeah. I mean,
weird.
there's only $68,000 in the market in total, so it's definitely just like not like petty change, but yeah.
Well, I just want to announce, I know you're going to be busy, so we're going to do a Bankless viewing party on this.
Yeah, it's going to be streamed on the Bankless YouTube.
I don't know if I am worthy to be an announcer on this. Like, I feel like I need someone who knows kickboxing, or else it'll be a very dry analysis. Oh, David got punched. Oh, like Nick looks tired.
Ooh, some kicks.
Anyway, stay tuned for that, Bankless Nation, for what's going to be the most hype event in crypto of this year.
The biggest fight of all time. Yeah.
David, our friends over at Transporter got something to say. What's up with Transporter?
Transporter, a brand new bridging app on the scene to bridge between all of the layer 2s inside of the Ethereum ecosystem. And Transporter, super intuitive UX. It uses CHAINLINK's CCIP bridge in the background. And you can bridge ETH, Link, USDC, and other assets between all of the locations that you can see on transporter.io. There is a link in the show notes to use the new Transporter bridging app.
David, can you do the History Channel thing? Last time you did this blitz, you did this. You did the thing when you described Transporter.
Bridging.
That was awesome.
I actually had no idea that for the listeners, somebody caught me in a frame doing the history meme aliens thing.
That's perfect. It's my new meme template. Let's talk about prices.
Bitcoin. 64,000 is where we started, down 7.7%. 59,000 is where we are ending. Ether doing something similar. 3150 at the start, down 5.2%. 2990. This month, or last month, the month of April, was the first monthly red candle since September of 2023, which is kind of an insane streak. We had 7 green monthly candles in a row from September up until March. And then finally, April broke that combo with the first red candle, monthly red candle, down 15% in April.
Okay. Do you know the nerve of some people? They're calling for under 50K Bitcoin at this point.
Down another $10,000?
Yeah. There's serious calls for this. Do you have any reason why? Like, what do you think's going on here? Why down?
Well, first, 7 green candles in a row is insane. And so just like at some point, the party has to stop.
Okay.
We also got jitters from like geopolitical tensions in the Middle East, but also like inflows into the Bitcoin ETFs have also slowed down. James Safer, he tweeted out that IBIT, the BlackRock Bitcoin ETF, had its first day ever of net outflows. So the Bitcoin ETF, BlackRock's Bitcoin ETF lost $36.9 million, which is like overall like pennies in the grand scheme of things, but it had literally had a 100% track record of only inflows. But like in final equilibrium, ETFs have both inflows and outflows. And so like they generally like, balance out. This is the first day we've had an outflow since only having inflows into the BlackRock ETF.
So if I'm reading the KRAKEN charts, right, and by the way, thanks to KRAKEN for sponsoring this entire segment, we are back to February prices for March and Ethereum, which doesn't sound bad when you say it like this. Are you ready for another explanation of like why down, David?
Tell me.
Okay, so here's a seasonality explanation, and it goes like this. This is apparently something they say in TradFi, okay? Sell in May and go away.
I've heard this, yeah.
People like to take their summers off. I suppose investors do. And so that's what happens in TradFi markets, I guess. Like traditionally, markets are down during May, June, July, August, the summer months. And then we come back. We come back like toward the fall. If you map this same principle to crypto, actually, look at this. Buying Bitcoin in October and selling in April had a 1,500% cumulative return. That's over the past 5 years. However, if you buy in May and you sell in September, you are down 29%. It looks like crypto likes to take the summer off. Look at this chart, man. This is, if you just skip the summer and you sell in May, the nice like green line here, and the other is if you're buying in April, and you just kind of like
weird. So it's aggregating seasons across years.
Yeah,
that seems weird. That doesn't. I'm not sure how I feel about that, but I'm not going to argue with the data.
I mean, how can you argue with the data? I mean, like, do you take it easier during the summer in crypto? Do you have like,
No, bro, I am always on.
You're always on? Well, then for you, it's a fantastic buying opportunity, I suppose, in the summer. But what this could mean, if we're in the sell in May regime, then it means that prices won't bounce back immediately. We got to get through kind of a slumpy summer. And you're right about those Bitcoin ETFs. Like, just to put an aggregated perspective on this, there's been a steady outflow of ETFs in the US the past 5 days seen net outflows of 632 million. So it's not just BlackRock's ETF, it's all of them that are bleeding. But I guess you'd expect this, right? We built a pipe, so that means capital can come in faster. It's a big pipe. And it did. And they can also leave faster when people are selling in May.
That's a good point. Can also leave faster. I never really thought about that.
Yeah, the leaving part is new for us, I guess. I mean, we've been used to up only. David, how about the total crypto market cap?
Total crypto market cap, $2.32 trillion, slightly down on the week. Also in ETF land, Bitcoin and ETH ETFs launched in Hong Kong. The first day of trading volume had a whopping $12 million of spot ETH and ETF volume. If that number seems low, it's because it is. The average Bitcoin spot volume alone in the United States is 4.6 billion.
For one day?
For one day, yeah.
So 12 million versus 4.6 billion.
Yeah, on the first day.
Wow.
On the first day of the ETF approval.
I see.
So very, very big deal in when it was like launched in inside the United States.
It's a baby.
And we've always known the Hong Kong markets are like just minuscule. It's more symbolic than anything. So it's not a surprise. We've always known that the Hong Kong ETFs and overall the Hong Kong capital markets are just like minuscule in comparison. So it's more of a symbolic thing that the Bitcoin and Ether ETFs are launched, but nonetheless small.
Yeah, when you look at it in absolute size, it's absolutely small. However, David, if you look at it just compared to other Hong Kong-based ETFs, it actually ranks as 6th of 82 ETFs that have launched in the past 3 years. So it's the top 20% overall relative to other Hong Kong.
Of a very small market.
Yeah, of a very small market. So there you go. Not totally unexpected. I wanted to get your take on Bitcoin miners. I'm hearing that they're starting to struggle, which doesn't really make sense to me because it seems like fees are at an all-time high with the launch of runes lately. Like there was one day we talked about it on the last Rollup. It was like almost an $80 million day in terms of fees. I had expected that miners would just be raking it in, but they're not.
That $80 million day, Ryan, was just that, just one day. Bitcoin miner revenue has been on it's all down only because margins always just get compressed. And then the halving comes in and cuts in half.
Literally cuts it in half.
Literally cuts in half the basal income of Bitcoin into miners. And so while there was there are spikes of revenue from degen ordinal rune activity on Bitcoin, it's not sustainable. It's just it's actually just acute and anomaly rather than just the actual basal level of Bitcoin inflows into miners. And so miners are this right after the halving, which miners are totally prepared for. They know this is coming. But it is the hardest time to be a miner right after the halving. And this is really when the least efficient miners get washed out and the more efficient miners win, just based on overhead and capital costs and all this kind of thing. So this is the culling of the herd of the miners. And so strong miners are going to get replaced by weak miners are going to get replaced by strong miners.
And I'm not a miner. You formerly were a miner. Small time miner.
I got washed out.
You got washed out just like this. So that purged you of any ideas that you'd create a larger mining entity. Why should we care? If you're not a miner, why should we care?
Because this ultimately impacts the security of Bitcoin. When less efficient miners get washed out and more efficient miners win, ultimately, I think the data represents this, is that this is a centralization of Bitcoin miners to large-scale capital efficiencies, economies of scale. This has been the long-standing critique of proof-of-work-based security from the proof-of-stake camp, is that ultimately proof-of-work is just defined by economies of scale, which is a very strong centralization force. And so if your long tail can't be sustainable, then you actually just are left with only the fat tail. And so this impacts the security of the Bitcoin network. The theory around Bitcoin security, again, from the proof of stake camp, is eventually it runs out, simply because it literally does approach zero over time. And so every halving is one step closer towards that.
Mining is supposed to be super competitive as well from the Bitcoin mining perspective. But you know what could really help the miners at this point in
time? Fees?
Yeah, but also Cathie Wood's prediction of 3.8 million for the price of Bitcoin price by 2030. Cathie Wood of ARK Invest is predicting this. This is a raise on her previous prediction, which was 1.5 million. So she's
raising her price target?
She's raising it at a time.
That's typically a no-no.
Now, Cathie's not afraid to do that. All right. So 3.8 million. Again, one Bitcoin right now is 60,000. We just went over this. But by 2030, Cathie Wood says 3.8 million. That seems really high. But let me tell you,
very high.
Let me tell you how she arrived at this number. It was a simple calculation. If institutional investors, there's a lot of those, and they have a lot of money, if they were to allocate just over 5% of their portfolios, that's all it would take. Then that alone would send the Bitcoin price to 3.8. So that's what she's saying. David, 5% doesn't sound like a lot.
Of an entire portfolio to dedicate to one asset, it kind of does seem like a lot.
I feel like it's more 5% to crypto, and that'll happen. I don't think all of that gets allocated to Bitcoin.
That makes more sense to me.
That's my take.
By 2030, Bitcoin will not be the only ETF on the markets.
But actually, here's I blanked this out in the agenda, so you couldn't see. So it's
I was wondering why parts of our
agenda
have been redacted from me
on my agenda. Big reveal. I still use paper for my agendas every week.
That's going to turn into a screenshot on Twitter.
Yeah. David makes fun of me for that. Okay, so how much do you think? So Bitcoin's at about 1.1 trillion in terms of total market cap. How much do you think that of that 1.1 trillion is held by countries and companies? How much?
Companies. Okay, so MicroStrategy is a company, and MicroStrategy owns 1%. I know that.
Oh man, you're really getting...
countries. El Salvador is much smaller than MicroStrategy. So I don't even think countries even is registering here. BlackRock and all of the others, is that counting our ETFs companies? I think so, right? That's counted as companies.
Swag it. You know, no, an ETF, if it's owned by an individual, it's not. If it's owned by a company, it is. It's not just everything that's custodied.
I'm going to go with 4% is held by countries and companies.
A lot more. All right. So this is VanEck's estimate. And maybe they're off by a factor of X amount, but it's probably in the ballpark. VanEck says they own about 175 billion. That'd be closer to like, I guess a 17% or so, something like this, right? 16, 17%.
About 14%, yeah.
14%.
14%? What?
Yeah, 14% is held by...
who
actually, this does include ETFs in the headline. It looks like it's ETFs.
All right,
nations
well, in that
and companies.
yeah, that's what I thought.
That's still a lot.
ETFs are the big one.
It's still a lot more than I thought, right? I mean, 14% already owned by companies. We know that crypto, like Bitcoin, has always been retail first, and it's still retail, predominantly owned. But now,
if it's 14% companies, ETFs, all these things, everything else is retail.
Yeah, they're entering
or I guess VC funds.
Yeah. David, do you want to hear a quick Fed watch, maybe just a drive-by?
Yeah, let's do it.
So Chairman Powell made some statements this week. Just the summary is not unexpected. Number one, a rate hike, very unlikely, not in the short term anyways. His base case is to cut rates later this year, but not a given, no promises. There's no sign of stagflation. He wanted to make that explicit. And he still maintains that the 3% inflation that we're in right now, that's not acceptable. He said something, there was like a direct quote, 3% inflation and satisfied shouldn't even be in the same sentence, is what he said. It was kind of entertaining. So did you expect, I mean, this is pretty much what I expected. I don't know if this is news to you, but it's what I expected.
So inflation is no longer this is my take about the current state of the economy. Inflation is no longer out of control, but definitely still present.
Yeah.
So I think he's just saying we're actually still in middle of 2023 state of inflation.
Yeah, I think what's most interesting about this is doubling down, tripling down, quadrupling down on saying 3% inflation is not acceptable. All right, because that kind of, I don't know, if it paints him in a corner, right? But if it's harder for him to say, no, actually 3% is the new normal. Just kidding.
Right.
When he keeps doubling and tripling down on this. So that should be interesting. He's definitely trying the Volcker tactic of, I'm going to break the back of inflation.
Sure. All right, back to crypto topics. Can we talk about Solana?
Yeah. So Solana's had a absolutely massive run. I think a question on people's minds is that it? Is it over? And we've got some...
Where does the future of Solana lie?
Yeah, so there's some usage metrics from ex-user Gumshoe, Twitter ex-user Gumshoe. Solana season is said to be over. It can't pump more, yet it solidified itself as the best chain on a lot of relevant metrics. Let's talk data. What's the data that Gumshoe is presenting here?
Some actual pretty useful charts here. So chart number one, usage increasing. And this is just a matter of transaction fees inside of the Solana ecosystem. And you can tell when exactly, you can just point to where the Jito drop happened, right as non-vote priority fees got kicked in. This is Solana contention. And so that's been up only ever since the Jito drop, which happened
actual
in the end
user
of 2023.
transactions, right?
Yeah.
It's big.
Yeah. Well, yeah, users, bots, it's all kind of the same thing. Like MEV bots, these are the same thing as on Ethereum. Right. But like the net aggregate user transactions are up. After that, stablecoin transactions. This is actually a new dashboard from Visa, which we're going to show in a second. The stablecoin transfer and transaction size on Solana is also just very, very healthily up. Solana is actually according to this chart, the largest bar by far, followed by Binance Smart Chain, followed by Polygon, followed by Tron, followed by Arbitrum, followed by Base, also all in like a Pareto curve. So Solana definitely the dominant total transaction size in stablecoin transactions. And then there's DEX volumes, which is on an 18x increase between 2023 and 2022. And then active addresses hovering around 20 million plus in the Solana ecosystem. TVL definitely needs some work, but I mean, it makes sense for a transaction and high speed throughput blockchain. But nonetheless, the Solana TVL up from 210 million to 4 billion since August. So definitely, like, it was pretty hard to argue. Like, some pretty healthy charts, some pretty healthy metrics in the Solana ecosystem.
It's totally benefited from kind of the meme coin craze. It's kind of the place to go for meme coins. Also, the airdrops have been juicy on Solana so far this cycle. Like some of the biggest that we've seen. And the question is, will all of that continue? So
I don't know if that's true. Like Jupiter was one big one, but like even the Jito drop, Jito actually only dropped like 100 million or something. That's pretty small.
Maybe it was more. I was thinking more like from a received by individuals perspective, because Jito went to like 10,000 people or something, a very small number, but it was like a lot of money for each of those users.
Yeah, so it was an average of like $10,000 per user. It was like $130 million to 10,000 addresses.
Yeah,
and this was before the airdrop meta really even like was a thing. And so one of the reasons why the Jito airdrop is as big a deal as it was, even though it only went to 10,000 addresses, because no one expected it.
Well, it feels so big if you're an individual and you get just like $15,000 or something, 10 to 15. Like that feels like generational wealth overnight. Like that's the crypto dream. Right, especially
when comparison to Uniswap, which like actually created the airdrop meta, and Uniswap was like $1,400 rather than 14,000 or whatever.
So, David, do you have any conclusion? Do you think Solana season is over, or do you think it pumps more?
I mean, Solana is approaching, so like in post FTX, it was definitely oversold, right? Like under indexed on by the industry. And since then it's reverted to the mean, right? And then maybe it's also like justifiably grown just by the UX and all these kind of things. But like it's no longer totally disregarded by the market, right? It has approached a closer, like what your close number is, what your approximate fair value is for Solana, up to you. But it's closer there than it was 6 months ago, that's for sure.
Yeah. David, we got a lot coming up. EIGEN introduced its token. They dropped it, but everyone's mad. We got to talk about that. Also, crypto hits a record for the richest person ever to go to jail. Because of course, you know, CZ.
Oh my God, that's the most classic crypto headline. The richest person ever who goes to jail is a crypto person.
Yeah, so stay tuned for all that, guys. We'll be right back. But we want to shout out the sponsors that made this episode possible, including KRAKEN, our #1 recommended crypto exchange for 2024. If you are a Bankless listener, you have to have an account at KRAKEN. Go create one.
If you want a crypto trading experience backed by world-class security and award-winning support teams, then head over to KRAKEN, one of the longest-standing and most secure crypto platforms in the world. KRAKEN is on a journey to build a more accessible, inclusive, and fair financial system, making it simple and secure for everyone, everywhere, to trade crypto. KRAKEN's intuitive trading tools are designed to grow with you, empowering you to make your first or your 100th trade in just a few clicks. And there's an award-winning client support team available 24/7 to help you along the way, along with a whole range of educational guides, articles, and videos. With products and features like KRAKEN Pro and KRAKEN NFT Marketplace and a seamless app to bring it all together, it's really the perfect place to get your complete crypto experience. So check out the simple, secure, and powerful way for everyone to trade crypto, whether you're a complete beginner or a seasoned pro. Go to kraken.com/bankless to see what crypto can be. Not investment advice. Crypto trading involves risk of loss. Have you ever felt that the tools for developing decentralized applications are too restrictive and fail to leverage advancements from traditional software programming? There's a wide range of expressive building blocks beyond conventional smart contracts and Solidity development. Don't waste your time building the basics from scratch, and don't limit the potential of your vision. CARTESI provides powerful and scalable solutions for developers that supercharge app development. With the CARTESI virtual machine, you can run a full Linux OS and access decades of rich code libraries and open source tooling for building in Web3. And with CARTESI's unique Rollup framework, you'll get real-world scaling and computation. No more competing for block space. So if you're a developer looking to push the boundaries of what's possible in Web3, CARTESI is now offering up to $50,000 in grants. Head over to CARTESI's grant application page to apply today. And if you're not a developer, those with staked CTSI can take part in the governance process and vote on whether or not a proposal should be funded. Make sure you're vote ready by staking your CTSI before the votes open. Launching a token? Worried about the IRS? Talk to TOKU for 5 minutes to learn how to save hundreds of thousands of dollars for you, your team, and your investors. Now, if you do an initial consultation, TOKU will cover the cost of your token valuation, which is what you need for your launch. So don't wait. Reach out to the team right now at team@toku.com. That's team@toku.com.
The much anticipated EIGEN restaking protocol, the token has dropped. They're calling it a stake drop. So what happened?
Okay, so we're gonna break this down into a number of sections here. We're gonna go through the actual EIGEN token and the tokenomics and what the hell intersubjective means. Then we're gonna get into the stake drop details, the distribution of the token, who got what, how people feel about that, and then we're gonna go through the list of grievances that the people, the nebulous people, feel about EIGEN, the actual details of the drop, and then me and Ryan are going to reflect on all of these things and some other people's reflections in the space. So starting with the actual EIGEN token, it's called a universal intersubjective work token. Ryan, right off the bat, did you understand what universal intersubjective work token meant when you first read that paper?
I had no idea. That sounds like a white paper, you know.
It was. Okay. It was a 40-page, very academic white paper, which is extremely on brand for the writer of that white paper, Sriram, who is literally an academic who has written white papers before. Okay, so let's go through this. Universal intersubjective work token. What is a work token? A work token is a token that gives its holders the right to contribute work to a network and earn rewards based on their contributions. This is a model that has been pioneered before. People who may remember the Augur platform. This Augur was a work token. This has been a tried and true like token model. Many tokens are actually work tokens. You just don't know about them. You just don't call them that. A holder of a token stakes their work token, which gives them the right to perform some work that is required by the protocol and then is compensated as a result. This is actually in contrast to a governance token, of which EIGEN is not. EIGEN is not a governance token.
So it's a work token. It's not a governance token. And a work token are like the model. I used to always explain this is like, taxis and taxi cab medallions. It used to be in old taxi networks. In order to be a taxi cab driver, you had to buy a medallion in whatever jurisdiction you're in. And that was essentially your work token to operate within the taxi cab network, right? And like earn fees for providing work to it. That's what you mean when you say work token. In case people aren't familiar with that term, it's that.
Yeah, that's right. We've seen this model of assets in TradFi, right? Like the taxi cab work token aspect, like the medallions in New York used to go for like millions of dollars before Uber came in and effed all that up.
Nerfed them.
And to nerf but like it was actually kind of a sad story for like people who like were saying that was their business is they had
and you
capital expenditure. You invest in the taxi medallion.
Sometimes you took a loan against all sorts of things. But anyway.
Yeah, so like the idea is like the work token, it like a taxi medallion is like a $1 million asset, and then it nets you something like 1.5% APY because of the work that you get to do as like you get to loan it out to your taxi cab drivers.
Okay,
anyway,
so same thing.
That's a
here.
work token.
That's the work token piece.
Intersubjective. Okay, blockchains are very good at penalizing objective faults. These are like double spends, ZK proof violations, fraud proof violations, all things that math can ascertain to be incorrect or correct. Intersubjective faults are things that blockchains cannot ascertain to be a fault or not, but are nonetheless completely objective to a rational observer. So two humans can agree 99.9% of the time whether something was a fault or not, but a blockchain simply does not have the knowledge or awareness or the data to be able to decide what's a fault or not. An example of this is a data withholding attack, which is why we need data availability, where some validator is holding data hostage, but the blockchain itself isn't actually aware of that fact because it's being withheld. So the blockchain can't do any slashing because it's not aware of the data being withheld. But two rational observing humans can look at this and be like, oh, somebody's withholding data. So there's a fault at here somewhere. So that's what intersubjective means. There are faults, and two or more rational humans can totally agree without reasonable doubt that like there's a fault here. And then universal, the last part, like I said, we've seen this work token model before. We've also seen what I'm about to explain is this forking contract before. Augur, like I said, built this forking contract prediction market back in 2018, but Augur's intersubjective fault system was application specific. Augur was built to settle disputes between prediction market outcomes. That's what Augur was. EIGEN is universal because you could, in theory, build Augur as an AVS on EigenLayer, and then you can use EIGEN as the work token for that application to use EIGEN to settle disputes. But you could also use the same EIGEN token to settle intersubjective faults for any other AVS that also needs to settle intersubjective faults. Okay, that was universal. Part of this key component of the EIGEN system is this forking contract. So there's actually a 2-token model to the EIGEN token. So there is the fungible normal EIGEN token, which is like the typical token that people are familiar with. This is the token that goes in DeFi, that will be on Uniswap, that will be in AAVE, etc. And then there is BEIGEN, which is backed EIGEN. And this is like a derivative form of EIGEN that creates this forking contract. And this is how the intersubjective faults are settled. And so if there is a fault that the EigenLayer community has determined is a fault, this it goes to court, and this is a court case. And so you can see in section 2 here, you have BEIGEN number 1, which will split into 2 universes, but one universe representing one outcome or the other, who it was in the correct or who was in the wrong. And these 2 universes split, and people stake their EIGEN to one of these 2 different universes. And then in a typical scenario, like the vast majority will just all agree on which is the correct universe. Somebody was being a malicious attacker here. Everyone else was being honest. People are going to stake their EIGEN tokens to the honest side, and then all of the EIGEN tokens staked to the dishonest side get burned. And so this would actually decrease the supply of EIGEN. And so this is how 2 different universes are birthed for the EIGEN token. And then all of the attacking malicious EIGEN gets burned, and then the EIGEN token goes off into this future universe. And this is how intersubjective faults are settled in the EIGEN ecosystem. It cannot do this with Ether because you cannot fork the blockchain just to settle disputes in the EigenLayer ecosystem. This is highly related to Vitalik's post about don't overload Ethereum consensus about EigenLayer. And so this is the answer to how you can have intersubjective faults in EigenLayer AVSs without having to worry about forking the Ethereum blockchain. You actually just fork EigenLayer. Why there needs to be a 2-token model is because you also need to have the tokens just be working in DeFi, as everyone is familiar with, and be totally unaware that all of this is going on. And this is also why there's work in the EigenLayer ecosystem. Does all that make sense?
Yeah. Can I just say something about that, David?
Sure.
That's kind of a lot. Like, so I think the question on people's minds who are excited about this token is like, but how much am I getting? Like, where's my airdrop? I mean, that's a whole bunch of vegetables that like are, you have to digest. And I think there's a good percentage of the population who's just like never going to understand this or only understand a small sliver of it, right? And I actually think this gets to, I know we're going to talk about the criticism. This actually gets to some of the criticism of the airdrop from kind of like the average crypto native person on the street, which is like, I kind of want to hear about my token and how much it's worth and how I can unlock it. And what I feel like I got was a
intersubjective work token.
Yeah. And that's like a academic, like 40-page type thing. And I think, by the way, I think this is why EIGEN had some, like some of the comms problems around this drop in the first place. And it's just like the nerd in me is really excited about what you just said. And also I feel like I have to like digest that and understand what it means in the context. But like, the degen, the crypto, like, I'm just like, but like, give me the details. How much did I get?
So this goes at the heart of like kind of the conflict between, well, EigenLayer is producing this very sophisticated forking contract to increase the scope of what security and trust it can provide the universe. And then on the crypto side, it's like, stop talking to me about intersubjective work. Like, I would like to know, I will give me my tokens, please.
I think the average person got something from what you said, which is, oh, cool, it's a work token. It has utility. It's not just a futile governance token. There's a purpose to it. So check box, right? I don't know how much more I need to understand about like, or could understand about intersubjective forking at this point in time. Okay, so let's get to the details of the distribution. What did that look like?
Okay, Eigen distribution, 1.67 billion tokens, 5%. It was released in this initial season 1 stake drop. Claiming will go live in 10 days. We'll talk about the transferability in a second. Of the total supply, 5% is season 1. There are multiple seasons. 15% of the total supply of Eigen is allocated into the stake drops, which are just airdrops, but the only thing you can do is you can stake your token. 5% is getting released now. You can see your allocation. We'll talk about that again in a second. And then let's see, early contributors. This is the EigenLayer team, gets 25%, investors 29%, community initiatives and ecosystem are 15% each, and you put those together and you basically have what I'm pretty sure is the foundation. So this is like community incentives, bootstrapping the decentralization, whatever a foundation does, which the typical model of a foundation that we've seen.
So 15% total will be dropped to quote unquote the ecosystem or the community, right?
The community,
5% announced in this first kind of drop.
Season, yeah.
You can't actually claim the tokens at this point in time, but you can see if your address is eligible, and you can claim them. What, it was like May 10th or something like that?
Yeah,
that's when you can actually claim it. Okay, I'm with you so far.
That's right. Okay, so like a lot of the feedback about EigenLayer is the nature of the distribution. Some people do not like the linear-ish nature of the Eigen distribution. So it's linear-ish because of the point system. You put your ether into EigenLayer, you start accruing points. The more points that you get, the more Eigen tokens that you got. Except with some small caveats. People who restaked their ether into EigenLayer in the very first phase, who took on, like, who were very early, like the first depositors into EigenLayer, they took the extra risk because they were first through the door. They got a small boost of EigenLayer rewards just for being early. Native restaking, as opposed to liquid staking tokens restaking, got a boost. So if you deposited ether or natively staked ether into EigenLayer, you got a boost. And then everyone got at least 10 Eigen tokens. And so the long tail of addresses got a boost. So if your rewards were below a total of 10 Eigen, then you just got bumped up to 10 Eigen. So no one got less than 10 Eigen. This actually impacted 130,000 addresses. So what would have been 400,000 Eigen tokens given to the bottom 130,000 addresses actually turned into 1.2 million Eigen tokens, which were given to the bottom 130,000 addresses. Overall, 260,000 addresses got Eigen tokens in the season 1 allocation.
Yeah, and so I guess like the question is, how many addresses? Evaluating airdrop, how many addresses got it, right? So how wide was the distribution? And I guess that's a proxy because some of these things can be Sybil attacked. And then like how much value was actually dropped, right? And so if you do an implied Eigen valuation at about 18 billion, and by the way, there's some small illiquid perps markets that value Eigen at 18 billion. Is it 5 billion? Is it 10 billion? Is it 50 billion? We don't actually know, but let's take 18 billion. That would mean about 900 million was awarded to those 280,000 addresses at this point in time. And again, they can't claim it yet. They will be able to claim it. And by the way, once they claim it, it's locked. We'll talk about that in a second. But if you do some comps on that, and then, by the way, there's another 1.8 billion. So that's, again, that's 15% of supply that is set aside for future drops to the ecosystem, to the community, right? So, I mean, how much is that in total? Are we talking about, like, we're talking about north of 3 billion, I guess, in total that would be dropped at an 18 billion valuation?
Yeah, just counting season 1, which is 5 of 15% of the total amount of Eigen tokens that's going eventually to the community, however you want to define that. Just counting the first 5% is $903 million, which puts Eigen as number 3 of the total amount of value distributed to 260,000 addresses. So just for comparison purposes, ARBITRUM dropped 1.5 billion to 625,000 addresses. ENS dropped 1.07 billion to 138,000 addresses. DYDX did $250 million to 64,000 addresses. So again, EigenLayer, 903 million to 280,000 addresses. Oh, 280,000, sorry, that's the right number. So like actually just with season 1, not counting the unknown season 2 and season 3, we don't know where that's going. Just season 1, it puts it at number 3 in the airdrop terms.
Okay. one other fact here is eigenlayers aren't transferable at this point in time. So you can check your eligibility, you can claim them on the 10th, and you could stake them. But even once you claim them, you can't actually transfer them to another address. So you couldn't list them on, like, you couldn't sell them on Uniswap or anything like that. The tokens are locked. Can you talk about that?
So it was stated that Eigen will be non-transferable for some amount of time. The specific amount of time was not released, but they put some milestones in there. First, the whole intersubjective forking relies on like actual social consensus. People actually need to learn what intersubjective forking actually is because it's a work token. You have to know how to do the work. And so there is a phase of just people needing to learn what intersubjective forking is and what their role is. And then also there are additional components of the EigenLayer engine that also need to be turned on. These are just like internal milestones that the team needs to hit, which is payments and slashing. So key payment and slashing features should be well established and understood, as well as core elements of a sustainable marketplace. This is the EigenLayer team saying, hey, we got work to do. Once these things are live and once the community digests what a work token is, then we will unlock the token.
I think it's safe to say, so those are all the facts. Now we get into like a lot of people were upset about this.
Yeah.
There was a lot of grievances. And I think one of the things is based on what you just said is people were upset that they were receiving a locked token and not a completely an unlocked token. And by the way, there was no actual date. It was kind of an estimate of, hey, we'll let you know later when these things happen as far as when Eigen itself gets unlocked. So there was a lot of upset around that. And that was, I think, one of the core grievances that I heard, but not the only one, because this token was, this was dropped, right, on Monday. And David, Twitter like went absolutely wild. It was one of the...
It was crazy.
It was one of like, I would say, the most attacked airdrops that I've
ever seen,
right? In terms of like Twitter sentiment. And we could talk about like how real that is, how fake that is, or what that is. But it wasn't just on Twitter. It was like from channels that we look to for actual signal. So the Bankless citizens in Discord, a lot of people were upset. They had different issues. So what were those issues? What were the primary grievances, would you say, of airdrop recipients?
One of the biggest ones was the VPN restrictions, which were pretty aggressive. So there's two types of like website restrictions out there. There's geo blocking, saying, hey, if you're accessing this from any particular country, like the United States, you can't access this website. And like we're pretty used to that. Like that's like half of DeFi. And it's simple. You just turn on somebody might just turn on their VPN and just get around it. But then there's also more sophisticated VPN restrictions. So like you actually can't access the EigenLayer claiming website using a VPN because VPNs are like taggable, they're loggable. So any sort of like consumer, like business-based VPN, like it's not going to work.
And so the criticism was there was like no VPN blocking on the way in when you stake, restake your tokens, but there's VPN blocking when you go to claim was the basic criticism.
Yeah, so like the criticism is that like why are you guys blocking our ability to claim the token, but you're not blocking our ability to deposit the ETH, right? Like one is like can you use the application, and the other one is like a token securities conversation, but we'll talk about that later. The non-transferability is probably the next big grievance. It's non-transferable until a later date, and a date that actually wasn't stated. And so like, what's the point of having points if you're going to just release a token that's non-transferable? Like that's just on-chain points. It's still like, it's not real until it's transferable. And so that was another big grievance. The linear distribution people didn't like, even though it was like still linear-ish, it still kind of benefited the long term, but people wanted more.
Like at the bottom tier, right? So rather than at the 10 tier, minimum, they wanted a higher amount minimum type of thing, more linear at the bottom.
They wanted large whales to not have such a strong linear return on capital.
Right.
Like, this is the classic, like Justin Sun comes in, deposits 23 million Ether for 2 weeks. And then he gets like $1 million airdrop just because he has so much capital. Right. And so many people would like that not to be rewarded so strongly. That's why people don't like the linear distribution. Now, there's of course problems with sublinear distributions, but again, a topic for a different day. There's also, I'll agree, there was some sloppiness about the snapshot. So the snapshot for season 1 was taken March 15th, and then it was announced that the snapshot was taken on April 30th. So there's a 45-day period where anyone who deposited during this window or anyone at all earning points during this window were actually excluded from this drop. So people didn't enjoy that. And then there's like a team investor distribution and lockup terms. So like the token is non-transferable, but teams and investors have started their vesting. So people didn't like that, but that's actually not actually the case. The vesting schedule of investors and teams starts when the token is transferable. Most people don't know that, but that is the case.
But what's the overall the summary of the vibe? I think here's a take from a Bankless citizen, which is not a rando Twitter account. This is PM Lebs. Says, from the outside looking in, it looks like they accepted ETH from everywhere. They pumped the TVL, raised cash, and then decided they couldn't give out rewards for challenging jurisdictions. Why not prevent the US from participating up front? I don't know. It just seems greedy. There's like this feeling of like, I don't know. A lot of people...
Individuals feel farmed by EigenLayer.
Yes. Individuals feel farmed by EigenLayer. That would be a summary of the vibe.
So this is the caricature of like what people think like is the typical like raise strategy for big teams these days is like hype up your token, hype up your points, issue a points farm, get TVL in, go to A16Z, raise $1 billion, and then also release a locked token. Ha 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 ha. Gotcha. And so like I get the perspective. This is many people's conclusion who are viewing this thing as either as community members, and like there were like 10,000x meme coins on Solana that people elected to not go and participate in because they had their capital inside of EigenLayer, right? There were other opportunity costs. There were other things that they could have done, and many people feel like they just got nothing. They can't claim their tokens because they're geo-blocked. And even if they can claim their tokens, they can't transfer them. And so like, what did they really get? They feel like they got nothing.
I just want to double down on that, right? I get how it could feel like that if you're at the sort of the bottom and you only deposited a very small amount and you're only eligible for 10 and maybe didn't pay for your gas fee. At the same time, it's not clear to me that that's what the Eigen drop was actually rewarding here, right? And so like when you look at the actual APY, of I put X amount and I got Y amount return. Wasn't it something like it's like 60%?
The base case APY,
$18 billion valuation. So that's an assumption. But base case APY is for the amount that you put in to the token, you got about a 60% APY return, which is like, it's not going to turn you into like, it's not life-changing money, but it's a pretty good APY, I would say.
It's pretty good return.
Especially, I guess, considering that, obviously, the more ETH that goes into Eigen, the fewer, like, Eigen...
the rewards get spread around.
The rewards get spread around more. So, like, but just to level set here, APY was about 60%. Is that correct?
That APY at 60% is base case. If you were in the bottom 130,000 addresses that got the bump up to 10 Eigen, you got more. You got between 90 and 170% APY.
Okay.
For just being there. But like people are still saying, well, if you do the calculation, that 10 Eigen is $180.
Okay.
And so like it's just not much.
So I don't think EigenLayer has like responded officially to all of the clamoring that's going on, but what do you think, like an Eigen, if you're a builder in EigenLayer, say you're Shriram, what do you think their perspective is on this?
Okay, so the perspective of people building the EigenLayer engine, they have a different focus. And so like again, emphasizing that like EigenLayer engine that's being built, EigenLayer mainnet went live a couple weeks ago. EigenDA is now online. They are slow rolling out different components of the EigenLayer engine, turning them on, hooking them into each other. So the whole entire ecosystem of incentives and participants in the EigenLayer world are all humming. And so the Eigen token is actually just the next inline component to complete the EigenLayer engine that the EigenLayer team needed to turn on. And so that the EigenLayer team is like, okay, we are slowly building out the engine. We are slowly releasing components one by one by one. Now it's the next inline component is the Eigen token. Let's get that out there. Our lawyers don't want it transferable, so we're going to lock it. But you can stake it to EigenDA, and then you can provide economic security to EigenDA. Then we're going to turn on slashing, and then we're going to have some systems, and then everything is going to be like humming, and then the engine is going to be complete, and then we're going to unlock the token. Like that's the perspective of the Eigen builder, and that's their focus.
Yes.
And so they're not exactly taking into account like
the perception of this or the
perception of
this.
everything. They are just focused on turning on the EigenLayer engine.
Yeah, because EigenLayer has been a series of like releases and like you
slow
test and
incremental
release,
releases.
slow incremental releases. So I could expect that this would be a next like slow incremental release.
But on the flip side, the community just, some don't care. They don't perceiving that. They are just like, oh, I'm here for the token. I'm here for the rewards. It's a bull market. There's only so much time to reap the rewards of a bull market. I'm going to do the EigenLayer thing. And like, oh, what? I got a wet dud of a token that doesn't have a market value associated with it because it's not transferable.
Right.
And so like these are
different time horizons.
Perspectives. Different time horizons. Yeah. Yeah. There's also Jake Stravinsky also put out a very long tweet about this, basically summarizing that this was one of the most risk-off token release events that you can do. He says, the Eigen token kicked off a discussion about two particular design decisions. One, that the token can't be transferred, and two, it can't be claimed by United States Eigen users. So what is a risk-averse lawyer to do? Enter non-transferability. He says, in general, securities law only applies to assets that can be bought and sold. And then also geofencing. In general, securities law only applies to transactions that occur within the United States. Both of these options are on the conservative end of the regulatory risk spectrum for token distributions. But there are other points, he says, on the risk spectrum that are also defensible, even when the SEC might not agree. For example, free airdrops aren't securities transactions. So the vibe of the thread is that EigenLayer chose a very conservative regulatory cover for itself. And I think another perspective that the typical user doesn't have is like Athena, great airdrop, very happy community, team based in Portugal, right? EigenLayer, Sriram, EigenLayer team, United States based team. Like Sriram lives in Seattle. He's a professor at University of Washington. And so different teams and different projects have different levels of risk associated with them when they release a token.
Yeah, I think that's an interesting point, and it adds some friction to the claiming experience. I will point out though, no one has been able to claim yet, so you're just sort of geo-blocked from assessing your eligibility. I guess at this point in time, it's hard not to imagine. Which
you can also check your eligibility on Bankless Scalables.
It's just hard not to imagine that there would be third-party apps that would like allow you to kind of check eligibility and to like maybe even claim this elsewhere, right? If Eigen is in a position where they have to, they feel like the least risky thing is for them to geo-block that, like they do this. But there was not very much tolerance for the geo-blocking, in particular the VPN restriction, I would say, and that counts for something. I guess you could also take the flip side of this, which is basically like, hey, if you're in the game in crypto, you're going to get sued anyway. Like look at MetaMask, Uniswap, they're all sued. Coinbase, KRAKEN, they're all sued. And so
Gary doesn't care about your VPN block.
Yeah. And so I get that take as well. But, look, I'm not a lawyer. Don't make these decisions. All right. So what is then your assessment on this? What do you think?
I've kind of given bits of it throughout this like analysis. I think once the token is transferable in the future, like everything is going to be fine. Like 60% APY is very strong. That's very good, like farm for a very long amount of time, especially for $13.5 billion that 60% had to get spread around. Once the token is transferable, people are going to figure out how to get around the VPNs. It's not that hard. People are going to make it easier for other people to get around the VPNs. Then the token is going to be transferable. It's going to come in at some $1 billion market cap, and then everyone's going to be fine. And people are going to forget about it. That's kind of my base case.
So just like super noisy, and you think people are eventually going to be happy? Let me ask you, because there's a lot of charge that if you think like that, you are basically an out-of-touch elite, or like you are kind of a core investor in the project, or you have some exposure, or you have some upside. You're paid to think like that, basically. And what do you say to that?
Yeah, that's kind of like the base opinion, I would say. It's like that's the opinion of the community, is that like anyone affiliated with EigenLayer or associated with a team or like 1 degree removed is all of the opinion that like the things are good.
You can't have an opinion. I think you can't have an opinion. All right, so you are a longtime promoter. Like you're excited about the project.
I'm a big believer of EigenLayer.
I think that's genuine because I know you and you've been excited from the very beginning, particularly because of like ETH being restaked, monetary asset. Like it checks all the boxes for what I know about David Hoffman. You're also an advisor for the project, as well as I am. So somebody's going to listen to this whole segment and be like, your opinion is invalid. Of course you think that. You are financially incentivized to think that. All right? And like, so it's worthless. The analysis is worthless.
Right. Yep.
And I just want to say that because that's the actual mood. That's the mood. And
That's the mood.
What I think my big takeaway here is there's actually like this in this new kind of like airdrop meta 2024, there's like this dichotomy that has strengthened between kind of like what I'll call labor and capital. You know, all the labor and capital battles that like we've seen throughout history, right? Of, you know, labor's on one side, they're doing the work, and like capital takes all of the proceeds. I think there's like, you're almost forced into this dichotomy of you are on team labor, which means you are a user, you are trying to you like be eligible for the airdrop, trying to do the activities that the protocol wants. That's labor. Or you're capital, you're a developer, you're a project, you're an investor, you're a VC, and then kind of like behind the scenes, and you have to choose one or the other. And it's interesting because I think like Bankless, you and I have been placed between both, right? I mean, so. Yeah, but like because you're on the capital side, you know, and because you're giving an argument on the capital side, your opinion's just invalid here. So there, I think some people will listen to this and just come to that conclusion, just like turn it off.
Yeah, there's somebody in my replies on Twitter who is like the team and the EigenLayer team and the VCs got something like 60% of the total distribution of Eigen. Meanwhile, the community only got 5%, even though again 15%. And they say like, hey, like you could just easily take away 5% from the teams and the VCs, and you could double the supply going to community, and that's just an easy thing to do, and you could have a massive outsized increase to the community. And I remember thinking some of these very similar like sentiments back in like 2017, just like
when you were on labor side.
When I was on labor side, yeah. And I was like, it's just so easy just to have an outsized benefit to the long tail, to the community.
Yep.
But I also just think that invalidates the risk that investors and the team have also put into EigenLayer.
That's a very capital opinion of you, David.
There have been EigenLayer teams who have been working 40 to 80 an hour a week since 2021. There have been EigenLayer investors who actually gave up capital. They put in their capital, just like how the community put in their capital into the airdrop farm.
It's a capital argument
to make.
It's a capital argument to make that basically without Sriram and the developers, it would be zero. There would be no.
And then the community is like EigenLayer is nothing without without us, right?
Yes.
EigenLayer is nothing without our community and our capital. And then on the flip side of things, well, like the investors are saying the same thing with their capital, and then the EigenLayer team is saying the same thing with their labor.
Yes.
And so it's like this three-way like standoff between investors, team, and community.
I agree.
But the thing is, like, the community has like 80% of the people, 80% of the voices.
Sure, they do, and I think that's what's happening. And at some level, like the give and take is kind of like good. I feel like it's good. I feel like this will equate to situations that everyone is more happy with. Or you know what I mean? I think there'll be some give and take. I think there'll be some check and balance. I think it'll work out. But I actually think there's another force here at play. Okay, and I'm not sure how many people see it, which is like I think there are genuine not users, not people who are excited about this, individual citizens. I think there are a whole bunch of like people that are industrially farming airdrops right now.
And they are effing it up for everyone.
Well, but I actually think that there is like, it's really hard to perceive, but there is like an influence on social media and like hiring. You can literally hire swarms of bots to like preach a narrative and like push it. And then so some of the people who are disappointed with the drop and our individual citizens get pushed into that mob attack. I mean, we've seen mob attacks at play so many times on Twitter.
Totally.
And it's almost impossible to know how much of that is at play, but it is a third party that is just Sybil attacking.
It's a fourth party.
Fourth party, Sybil attacking. Well, there's labor capital, and I guess I don't know what these are.
EigenLayer team, VC investors, community. That's three legitimate parties.
Yeah. I think most people see EigenLayer devs and investors in the same. Their capital.
Same boat.
But anyway, so there's this other party that's like pushing their advantage too.
The industrial farmers who are like bullying EigenLayer into giving many tokens to the long tail.
Well, let's say
they are half the long tail.
You have 100 addresses that you've Sybil attacked, right?
Yeah.
Well, 10 is fine. It's a fine return, but like, what's better? 20, 30, 40, 50 as far as that minimum eigendrop. That's going on too.
Totally. Yeah. And it's the most undetectable part of this whole thing.
The last thing I want to say about this is I actually think that's at play, but the biggest thing at play to me is just the delta between expectations and reality. And when there's a delta between expectations and reality, there's going to be disappointment. And I actually think it was impossible. No matter what this airdrop did, I feel like the expectations were so hyped. I mean, EIGEN restaking, this whole thing has grown so fast and so big that there were so many people expecting like something far beyond what was probably reasonable to expect, because like just
people are trying to retire off of airdrops.
Yes.
And it's just not going to happen. The space is too crowded.
And so that was never going to happen, but because people had that expectation and the kind of the reality was like, and I got something that was locked, so I can't sell it. And now you're talking about intersubjective forking and like, I don't care about this. And, you know, I wasn't in it for that. Like, I'm just... There are a lot of
parties around the EigenLayer ecosystem who are very incented to hype it up, because like all of the LRTs are trying to hype up EigenLayer because that's how they get inflows. All the AVSs, like I like EigenLayer because it is a very like Ethereum centric piece of infrastructure. That I think removes the need of like the long tail blockchains and puts it all into the same spot. Like that's my interest in this. And like I'm probably one of the main proponents of the whole like EigenLayer ecosystem. And I've been saying like, I think EigenLayer, before this, I said, I think EigenLayer could be the #1 airdrop of all time. And if you look at the actual dollars of capital that is set aside for the community, it is by far the #1 airdrop by value sent to 280,000 addresses. And so like there's some disconnect going on and it's all just very weird.
I was trying to convince David to not talk about this at all, by the way, because I don't know that people want to hear these opinions at this point in time. But there you go. There it is.
We got a meme for you,
David.
though.
Oh, you got a meme?
We got a meme. Yeah.
Oh my God, this. Yes, I've seen this. What are you looking at?
Okay, so this is a caricature of the EigenLayer token presenting itself to like a crowd of community, and then the community just like start just absolutely beating the shit out of EigenLayer. But then you see in the next frame, you see both Layer 0 and ZK Sync just in absolute fear, who are about to drop their tokens, and they're just living in fear of just getting beat up because the mob's going to come for them next.
Everyone learns from the last one, but I gotta say, depending on the time and place you drop it, it's gonna be a unique experience every single time.
Yes.
It's almost like you never know. All right, David. Moving off EigenLayer, let's talk about CZ. Okay, so his sentence came this week. Tell us, what did he get? How many months or years?
Everyone listening, guess how many months CZ is going to jail for? Because if you don't know, it's because you haven't been on Twitter. There's an ancient meme in CZ of him just flashing the 4 number, and it's his commitment. He spawned this from this tweet where he's always going to remember the 4th list in his tweet that he's going to say. And I can't even remember what 1 through 3 is, but 4 was always ignore the FUD. And so CZ flashing 4 has just turned into a meme. It's just like probably crypto's biggest meme. Yeah. CZ got sentenced to 4 months in jail, which is... That's absolute proof that we live in a simulation. So Binance is ordered to pay a $4.3 billion fine and forfeiture. CZ has to pay a $50 million fine, and he is going to jail for a whopping 4 months.
This is what he said. I would like to thank everyone for your care and support, writing letters, showing support on X. They mean a lot to me and keep me strong. I will do my time, conclude this phase, and focus on the next chapter of my life, which is education. I will remain a passive investor and holder in crypto. Our industry has entered a new phase. Compliance is super important. And he ends this and says, and funds are seifu. Protect users, he said. So that's how he's going out on crypto Twitter, at least for this period of time.
If this is the end of the era of CZ, he never lost a customer dime. Binance never got exploited. I think that's true. All funds have been SAFU since the beginning of time. So like there are people out there who
kept his commitments to the crypto community.
He made his promises and he kept them. And that is exceedingly rare.
Yeah, I will say. I think that like crypto's basically treating him as going to jail as a hero.
Yeah,
or at least
he's a martyr.
Certainly not a villain.
CZ's going to come out as a martyr for sure.
This is Eric Voorhees with a related take. Do you know CZ, David, will be the wealthiest person to ever serve time in a U.S. federal prison? Okay, so that's another record that crypto is setting. Voorhees makes the comment. Maybe because no bank execs ever go to jail. Yeah. Was Voorhees' comment. And that is true. There's definitely a sense that they are making an example out of CZ. This is great. Binance gets a $4 billion fine. That was also $4 billion.
It was 4.3. It's 4.3. That one, okay. I reject this one. He's trying.
All right, he's trying. Oh, okay.
This
Let's
one's
end the
good though. This
section
is a
with
meme
before we
from Mike Ippolito. This is a pretty. I think I remember seeing this meme in high school. The original meme is judge says to the victim or the person he's about to sentence, "I hereby sentence you to 68 months in jail," and then the person says whispers to my lawyer, and the lawyer says, "My client has requested that you add 1 more month, so it would be 69 months." But this is CZ saying, "I request that you add 1 more month to my 3-month sentence so you can make it 4 months because crypto Twitter will think that's hilarious." And it did.
Do you actually think that's what happened?
No, no.
You actually think the universe made it 4? Like,
Yeah,
you actually
I think
that's
a happenstance. Yeah.
Man.
I
that
mean,
is
like,
too good, though.
like I do think that there was negotiation between CZ and his legal counsel and the judge ahead of time for like that $4.3 billion fine. Like CZ could have just has remained on his yacht wherever. So like maybe the 4 was negotiated ahead of time, and CZ like, it would be really funny if it was 4 months.
I want to get CZ on the podcast to hear about this after he's out. So maybe 5 months later. David, we got a lot coming up. Next, Stripe is coming back to crypto in a big way. And also, I want to update you on the tokenized treasury wars. It seems like they're starting, and it's a little bank on bank action for you. Roger Ver. Do people know who Roger Ver even is?
People do not know who Roger Ver is. Nope.
We got all that and more coming up. But before we do, we want to thank the sponsors that made this episode possible, including one of our favorite layer 2s to recommend. That is Mantle. Go check them out.
Mantle, formerly known as BitDAO, is the first DAO-led Web3 ecosystem, all built on top of Mantle's first core product, the Mantle Network, a brand new high-performance Ethereum Layer 2 built using the OP stack, but uses EigenLayer's data availability solution instead of the expensive Ethereum Layer 1. Not only does this reduce Mantle Network's gas fees by 80%, but it also reduces gas fee volatility, providing a more stable foundation for Mantle's applications. The Mantle Treasury is one of the biggest DAO-owned treasuries, which is seeding an ecosystem of projects from all around the Web3 space for Mantle. Mantle already has sub-communities from around Web3 onboarded, like Game7 for Web3 gaming, and Bybit for TVL and liquidity and on-ramps. So if you want to build on the Mantle network, Mantle is offering a grants program that provides milestone-based funding to promising projects that help expand, secure, and decentralize Mantle. If you want to get started working with the first DAO-led Layer 2 ecosystem, check out Mantle at mantle.xyz and follow them on Twitter at 0xmantle. Taking self-custody of your crypto is one of the most important things you can do on your bankless journey. It's also one of the hardest things to get right, with huge consequences if you don't. If you want help going bankless, talk to CASA. CASA helps you take custody of your crypto assets so you don't have to wonder whether you're doing it right. CASA is a one-stop shop for doing self-custody the right way. With CASA vaults, you can hold Ether, Bitcoin, stablecoins, all with one simple app and multiple keys for the ultimate peace of mind, with a support team to help you every step of the way. But it doesn't stop at self-custody, because even though crypto is forever, you are not. We all plan on making life-changing wealth in crypto, but with CASA's inheritance product, life-changing wealth can elevate to generational wealth for your kids and your loved ones who don't know anything about crypto. With CASA, you won't lose your private keys, and you won't accidentally take them to the grave either. Click the link in the description to get started securing your generational wealth. CELO is the mobile-first EVM-compatible carbon-negative blockchain built for the real world, driving real-world use cases like mobile payments and mobile DeFi, and with Opera MiniPay as one of the fastest growing Web3 wallets, CELO is seeing a meteoric rise with over 300 million transactions and 1.5 million monthly active addresses. And now CELO is looking to come home to Ethereum as a layer 2. Optimism, Polygon, Matter Labs, and ARBITRUM have all thrown their hats in the ring for the CELO layer 2 to build upon their stacks. Why the competition? The CELO layer 2 will bring huge advantages like a decentralized sequencer, off-chain data availability secured by Ethereum validators, and one block finality. What does that all mean for you? With CELO layer 2, gas fees will stay low, and you can even pay for gas natively using ERC20 tokens, sending crypto to phone numbers across wallets using Social Connect. But CELO is a community-governed protocol. This means that CELO needs you to weigh in and make your voice heard. Join the conversation in the CELO forums. Follow CELO on Twitter and visit celo.org to shape the future of Ethereum. ARBITRUM is the leading Ethereum scaling solution that is home to hundreds of decentralized applications. ARBITRUM's technology allows you to interact with Ethereum at scale with low fees and faster transactions. ARBITRUM has the leading DeFi ecosystem, strong infrastructure options, flourishing NFTs, and is quickly becoming the Web3 gaming hub. Explore the ecosystem at portal.arbitrum.io. Are you looking to permissionlessly launch your own Arbitrum Orbit chain? Arbitrum Orbit allows anyone to utilize Arbitrum's secure scaling technology to build your own Orbit orbit chain, giving you access to interoperable, customizable permissions with dedicated throughput. Whether you're a developer, an enterprise, or a user, ARBITRUM Orbit lets you take your project to new heights. All of these technologies leverage the security and decentralization of Ethereum. Experience Web3 development the way it was always meant to be: secure, fast, cheap, and friction-free. Visit arbitrum.io and get your journey started in one of the largest Ethereum communities. It was rumored last week, but here we are, Stripe bringing back crypto payments this summer. They demoed a platform, their brand new platform, their interface for checking out using Stripe, and you have the normal Stripe interface, but there's this also pay with crypto button. Actually links to Solana, so it's integrated with the Solana blockchain. John Collison, Stripe's president, says at the Future of Payments conference, transaction settlements are no longer comparable with Christopher Nolan film lengths, and transaction costs are no longer comparable with Christopher Nolan films for budget. Stripe is bringing back crypto payments, this time with stablecoins, which are a way better experience. So yeah, Stripe getting back together with crypto.
Are you seeing this on the screen? So like what's super cool is in the Stripe checkout flow, right? It's connect your wallet.
Yep.
Connect your non-custodial wallet, right? And the example is Phantom. There's also like the option to, Rainbow, MetaMask, Coinbase wallet, all of this. And that statement that John was making. So like for full context of this, Stripe has like entered and exited crypto multiple times over the years, right? Like, oh, there's hype. Let's go check it out. And they go and they deploy it. And they find like it's not good for the payments use case. So I remember they integrated the Lightning, they like did all sorts of things. This time it feels very much like Stripe is doing something that is sustainable and here to stay, based on what John just said, which is these are super cheap now and it can handle the transaction throughput. And I think this is absolutely massive. Do you know there are like over 130 million businesses that use Stripe today?
Right. Well, I mean, this means you can show up to wherever Stripe, like I use Stripe in New York all the time because like every single restaurant has it. And that means I can have crypto on my phone. I can pay with crypto on my phone.
So did all the most of the websites use. Like a bankless citizenship. Like we use Stripe behind the scenes
the internet just uses Stripe.
The internet uses Stripe, and it is, I don't know if you know this, like a $90 billion private company. It's one of the largest private companies in the world, so it's still private. Anyway, I just think it's absolutely massive, and it's a testament to how far we've come because they're trying crypto this time, and they're actually going to stay for it. Pretty cool.
Not just Stripe, but also Visa. This is kind of a funny announcement, but Visa has a new dashboard for everyone. If you would like to look at stablecoin volume and metrics across blockchains and value, Visa actually has a very good dashboard. So this is Kai Sheffield tweeting this out saying, we decided to partner with Illumium Labs to create the Visa on-chain analytics dashboard to create a closer look at stablecoin activity. So it is just a dashboard, but it's also a very accurate and precise one. And it's done by Visa. It's pretty cool. And you can actually see in this chart, the absolute dominance that is Tether. Like USDC and Tether were like almost 50-50 with a slight Tether lead in the middle of 2022 last year. And now like Tether's just completely just a gargantuan. It's like 3 times larger than USDC.
You're talking, when you say large, you're talking in terms of supply, and that's one metric. But here's another interesting metric actually is they're neck and neck. USDC actually briefly overtook Tether in terms of stablecoin transactions. So number of transactions.
I think USDC might actually be transacting more than Tether. I think like USDC is the transaction currency.
Yeah, it's more.
And
of
then Tether's
coin,
the store of value currency,
which is kind of cool. But I will tell you, David, Tether is absolutely printing money. Printing money. Okay, so this is 1/4 of profits, 4.5 billion. 4.5 billion last quarter, Q1 2024 on that Tether trade. Right?
That's zero labor in that company.
Because the stable coin, like when you hold Tether, right, you don't get any of the interest. But Tether holds T-bills. They get 5% interest. Yeah. When you got $100 billion of Tether out there or more, I think it's about that, then you get to capture that 5%. And it's insane. A darn good business.
How many employees do they have? Like 20?
80 is what I was told from Paulo last time. So it's pretty good. Pretty good margin on that business. David, speaking of this, look at this. We thought securities, tokenized securities, were going to be a big deal. They're almost at $1 billion. Oh
wow!
So they're climbing right up there. And BlackRock.
I'm gonna call this the Onchain Boomer Index.
It's pretty cool, actually. So we got 800 million in tokenized treasuries out there. And I think there's going to be more. So
can I give you some alpha actually about this?
Yeah, go. Yeah, sure.
You know what is actually the surprising interested marginal buyer of on-chain treasuries in the crypto ecosystem?
Who's the marginal buyer of on-chain treasuries?
Who
is it going to be
the-
like DAOs or crypto
DAOs.
projects or something
Apparently,
like this?
the demand for on-chain treasuries from DAOs is really, really strong.
Yeah, because they want to last a couple cycles, right?
Yeah.
They just don't want to see their treasuries go to like, negative 80% territory next bear market.
Plus, their costs are in dollars. They pay their people in dollars, not Ether.
Yeah.
And so they have like ARBITRUM has like ARBITRUM ARB token. They also have Ether, but they also need some dollars, some working capital. And on-chain like Build Fund, for example, is like a great tool for that.
Yeah, and Biddle Fund's that's the BlackRock fund, of course. They've gotten a lot of the growth here recently, but this is the bank on bank action I was talking about, right? So Franklin
You really
Templeton,
want to say that?
I really want to say. I'll say it. Bank on bank. Okay, so bank on bank war.
Getting a little steamy over there.
Franklin Templeton, they've been tokenized treasuries for a long time, but they actually have a little app where it looks like individuals. It's called Benji. So they just released this week. They're offering
Benjamins.
Yep. Yeah.
Okay.
Again, it's Franklin Templeton, right? Benji tokens. Each maintain a stable $1 price. Each token represents a share of the tokenized treasury. Okay. They have 380 million treasury fund, and who can purchase it? You know that this whole thing has been mostly the institutions, like companies, DAOs, that kind of thing. Well, Benji provides apparently a way for individuals to purchase it.
Cool.
You get an app. You get your Benji as tokenized treasuries.
Get your Benji.
Get your Benji. Exciting
Pop
stuff.
quiz. What dollar bill is the Benjamin Franklin on?
100.
Okay, all right.
I'm all about those Benjamins.
As soon as I said that, like Ryan totally knows that.
Yeah, I mean, you said did you say this over the weekend that I don't listen to Eminem?
Yeah, I did say that.
Come on. I'm real, David.
All right, back to crypto subjects. Are you done with on-chain treasuries? Can I talk about crypto stuff?
That was a crypto subject. Where you been?
AAVE introduced
crypto native.
AAVE v4. So there's a number of big updates in the AAVE world coming online with AAVE v4. A unified liquidity layer, which is the big one. This is the multi-chain part of like Ethereum. AAVE is learning to contend with its many different AAVE deployments on Optimism, Arbitrum, Polygon, Mainnet. It is building out using all of the different like cross-bridging like messaging layers, like layer 0 and socket and all these different like interop layers. A universal liquidity application. So liquidity on Optimism and Arbitrum and Mainnet all ought to be the same. That is the vision for the AAVE unified liquidity layer. They also have some new features. Fuzzy controlled interest rates. I'm so glad you asked what that was. These are just interest rate curves that adjust both on the X and Y axis. So it's just a little bit more rigid. And so as demand for a particular asset in AAVE increases, the interest rate curves moves higher on the Y axis, but the steepness of the curve becomes more shallow. Basically, a much more dynamic interest rate curve in AAVE protocol. And then also just with increased emphasis of Go. So if you want to look more at the details of the AAVE v4, there's a link in the show notes.
Kink point down.
Kink point down.
Up.
Well, no, I wasn't going to say kink point, but now you said it, so I feel like I have to
I don't know
explain.
what that means. No, okay, you don't have to explain it. You don't have
there
to explain
is an
kink
inflection
points.
point in AAVE interest rate curves
it.
where if you can't hit 100% utilization because then no one can withdraw. So basically the interest rates goes to infinity as it approaches 100%. But like there's a kink point where like the interest rates are marginal and then kind of like at 90% it goes really, really steep. So the kink point adjusts more dynamically. So we can have more flexible kinking in AAVE. AAVE is tolerant of many types of kinks inside of its interest rate curves.
I'm not going to touch that one. Do you want to hear a headline from 2018? That's here. Yep. Coinbase just added Lightning to the Coinbase stack. I'm sorry, Lightning. I'm sorry. All right, so this is cool. Maybe it's the context of we just recorded an episode with Eric Wall, who's kind of a Bitcoin builder, talking about L2s, and he basically said Lightning's dead. I guess it's not dead. Maybe that's too mean, David. But anyway, Coinbase.
It's dead.
Okay, but Coinbase is now supporting Lightning.
You're still allowed to integrate with permissionless protocols even when they are dead.
Wow. David, I got to give you an update on the war on crypto. You ready for this?
Yep.
All right, so there's 3 things. The SEC apparently has been trying to make Ethereum a security this entire time. We didn't know it. So they were going to sue Coinbase over MetaMask. and now Coinbase is fighting back. Also, there was this weird, ominous warning from the FBI this week, and I want to tell you about that. And the DOJ is attacking the Square and Cash App. So it's these three things. The first is consensus versus the SEC. I don't need to get into all the details because we did an entire episode about this with Joe Lubin. And I think it's a dynamite episode. I actually re-listened to it this morning.
It was really good.
It was fantastic. But Coinbase is taking the SEC to court to prove in a court system, U.S. court system, once and for all, that Ethereum is not a security, that it's instead a commodity. And that's really the headline. That's the thing that you need to know. And it seems like from their list of evidence and their court filings, well, Coinbase has dug up all of these things about the SEC actually coming after Ethereum developers themselves, like sending letters to companies that employ Ethereum developers and like sending letters apparently to individual Ethereum developers, right? So this is all part of a broad narrative that Joe Lubin was painting of like, they're trying to cut off Ethereum, this is the US government, to US citizens, right? That's how high he thinks the stakes are. And I got to say, after listening to that episode and seeing what else is going on, it kind of seems like that's what's going on here. Also, same week, just like last few days, the FBI put out this bizarre public service announcement. Okay, and I'm gonna just TLDR it. You can read it yourself if you want to, but it's basically like, don't use unregistered cryptocurrency money transmitting services. Okay, and they reference a FinCEN database that shows you if the thing that you're using, the application you're using, is registered. And if it's not unregistered, you shouldn't be using it. And they're not real clear on whether wallets are money service businesses or code is. Maybe not. We don't really know what they mean. They're just issuing a warning to all US citizens to not use unregistered cryptocurrency money transmitting services. Why issue this warning? We don't know, David. We do know that 2 Samurai wallet developers were arrested last week. What? For having a money transmitting services business, essentially. We do know that the DOJ has filed against Tornado Cash, the Tornado Cash developers, and called their immutable code on Onchain, a money transmitter service. All right? So where does this leave us? With a really bizarre and ominous public service announcement from the FBI. Basically, our nation state's internal police organization. To who? To U.S. crypto native consumers? I don't know, but this is kind of creepy to me, and I don't like it. And the last thing is the Samurai Wallet co-founder, they pled not guilty, so they're going to be released on a $1 million bond. But the indictment against Samurai Wallet, those details were revealed as well. And the justice, so again, this is the DOJ, they claim that there's been $2 billion in illegal transactions. Illegal, all of them illegal, because Samurai isn't a registered transmitter. So basically everything that went through Samurai was an illegal transaction, but actually only 100 million was kind of the criminal part. You know what I mean? So the remainder of that $2 billion was actually probably legitimate, like people using this service.
For privacy, yeah.
For privacy, but it doesn't seem like the DOJ cares. They're just bundling it all in here. So,
well, of course, if you are seeking privacy, you are by definition a criminal, of course.
We are in like weird times, really bad times. It does feel like crypto is under this full frontal assault. The Tornado Cash is a case that we got to watch very carefully. There was more updates this week. We don't have time to get into it, but maybe, okay, so here's the last one, David, on the crypto wars.
Oh my God, there's more.
There's more. Last one, I promise. Square and Cash App are now being investigated for processing crypto transactions linked to sanctioned countries, and terrorist organizations. So this is Jack Dorsey, Square and Cash App. And it's basically similar charges, we don't know the details, to what they just busted CZ for, right? All right. I mean, put all these things together. That's just 1 week. That's just 1 week.
I'm reminded of my favorite tweet from Niraj from Coin Center, where he says, I'm sorry, your warrantless surveillance regime was based on the fact that you would always have intermediaries in your financial system.
Yeah.
But like, they're just finding the next most proximate intermediary that's not actually an intermediary, but they're finding someone.
Yep. It's such a chilling effect. David, do the kids know who Roger Ver is?
The kids do not know who Bitcoin Jesus is.
All right.
Roger Ver is basically the Satoshi of Bitcoin Cash. As in, he was the biggest proponent of Bitcoin Cash.
Okay, I see what you mean.
Do you remember the whole crying babies meme?
No.
Oh no, excuse me, dying babies. Yeah, there was like this rant that Roger Ver went on saying like, there are babies dying because Bitcoin is not forking into Bitcoin Cash, and we're not accepting 8 megabyte blocks into the Bitcoin block space.
Big blocker, real big blocker.
He was the OG big blocker. Yeah, it's like super hardcore libertarian. Indicted for tax fraud. He is accused of failing to file tax returns for the sale of his Bitcoin. Roger Ver has like sub $10 Bitcoin, and he has a lot of them. Also, or Bitcoin Cash, actually. Now that I think about it.
It's alleged in this across his companies as well, because he's invested in his companies. And like, so he, I guess, fun fact, or maybe not so fun, I don't know, depending on your perspective, he actually renounced his U.S. citizenship, and when you do that, there's an exit tax. So all of your you have
gains, to pay
unrealized
to
capital
not
gains,
be a citizen of the United States.
Well, basically, it's like, so you have a whole bunch of unrealized capital gains. Say you bought Bitcoin at 10, now it's appreciated a whole lot more. An exit taxes you as if you sold them all. Like when you leave the US, you have to pay that. And the IRS is saying he didn't pay that. So they're like taking him, extraditing him
from Spain to the United States.
Extraditing him.
Yeah,
there you go. It's Roger Ver.
That's just some like OG lore. Update on some OG lore. Etherscan. That's a partnership with us. So there's some news out of Etherscan and Bankless this week. You can now find all of your airdrops on your wallet directly through Etherscan, powered by Bankless claimables. Pretty cool.
Look, this is Vitalik's address. Do you know, Bankless told him, this is on Etherscan. It's always been like, by the way, a bucket list item for me to have like some product, something that we do be meaningful to Etherscan, because Etherscan is really what made Ethereum real to me and crypto real to me.
Top tier infrastructure. Yeah,
it's top tier infrastructure, but the fact
you can't understand Ethereum without Etherscan.
Yeah, the fact that you can go to an Etherscan address and see like all of your assets, that was just like magic for me. Anyway, so this is Vitalik Buterin's address, and you know he's got $7,000 worth of airdrops that he could claim.
Should I go tell him that?
Maybe. I'm sure Vitalik, he knows. I'm sure it's not. Claim your drops.
Hey, you have $1.9 million in your wallet, but you were missing $7,000 of airdrops, bro.
Well, you know, anyone can claim that on the Bankless Claimables app, of course. There's always a link in the show notes. David, meme of the week. Let's end this. What do we got?
This is a throwback of a meme. This is how crypto feels this week, and this is for all the OGs who watched Lost way back in the day. I can't remember this character's name, but she's like the preppy girl, and the plane has crashed, and there's like debris and fire everywhere, and she's wearing her like pink like shirt, and she's just like very sad. And that's your first crypto cycle. And then 4 years later, you are sun tanning on a beach in the middle of all that debris and all that fire, because you're just used to it. That's what working crypto's like.
Is that the way you feel now? This is your
right?
cycle.
Like, you know, mob attack right before the gym. Yeah, it's like a normal
week.
Tuesday, normal week in crypto. Yeah.
Yeah, you know, another SEC lawsuit, another couple developers get arrested, just normal week.
Yeah, and then you go get drinks with friends and call it a day. Yeah.
Oh my God, crazy times we live in. What a crazy industry. I wouldn't be anywhere else. I don't know about you though, David.
No, it's completely ruined, bro.
Too much fun.
I'm not going back.
All right, guys, we got to end with this, of course. Risk disclaimers. Crypto is risky. You could lose what you put in, but we are headed west. This is the frontier. It's not for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot.